music I want to hear.
This is Biggest Little Radio at 101.3 FM. 101.3 Biggest Little Radio presents Jan's Small Business Spotlight with Jan Friend.
It's high noon in a high desert. You are listening to Jan's Small Business Spotlight. I'm Jan from the Fernley News Network. Find us online at fernleynews.com for all your breaking news and weather. To find local businesses and services, check out our business directory at fernleybusinessdirectory.com. Remember, when you need products and services, keep it local. This segment is sponsored by Liberty Fitness, teaching strength and discipline. Call us with questions for our guest anytime through our live broadcast by calling 775-404-1115 or text us at 775-737-2344. You can also use the chat box online at biggestlittlerradio.com. They say there are two things in life: death and taxes. You've all heard that, right? Today we're talking about one of those things with my guest, Arnold McGuire from Patriotic Tax. We'll be discussing the changes for this year, along with tips and pitfalls you'll want to avoid, because nobody wants an audit. Welcome to the show, Arnold.
Thank you for having me.
You're welcome. What got you started in this field?
Well, actually, I used to do IT work, and my mother had been in taxes since 1992, and she wanted to start a franchise and got me involved in the tax side of it, and I've loved it ever since.
Okay, so you were on one side of it, and then you just kind of went over to the tax side.
And I used to tend bar, too, so I like dealing with people, so I get to combine computers and people and numbers and everything else.
So you've been doing this since 92?
No, I've been doing this since 2005.
Oh, 2005. Okay. So how do you have clients come in, or you have them throughout the year?
Majority of my clients are during tax season. Mm-hmm. I do have some business clients that have to file quarterly returns as well. Mm-hmm. And then you always have a few people during the off season that haven't filed in a number of years, and we get them caught up and on track with the IRS.
Okay. So this is actually, from January till tax time is your busiest time of the year?
Yeah, mid-January to mid-April is the busy time of the year, yes.
Mm-hmm. Mm-hmm. And then, but you work throughout the year? Yes, I'm
available on Fridays and Saturdays throughout the year, with the exception of 3-day weekends. Nobody wants to come in and do taxes on 4th of July weekend.
No, that's a party weekend.
Yes.
So where are you located? You're like downstairs from the station, right?
Right, I'm right downstairs here. I'm on the corner of 95 and Main at the stoplight. My store actually looks across 95 at the China Chef parking lot.
Okay. So it's really easy to find. So if
easy to find,
downtown,
I'm right here.
That's it, right? Okay. Let's talk a little bit about people that are just filing their individual or personal tax returns.
All right.
You mentioned to me earlier that there's some big changes this year that people really need to be aware of that are delaying the tax
yes,
refunds.
If Congress passed a law this last year, this is not the IRS's doing. Congress passes the laws, IRS has to enforce them. If you received earned income credit, additional child tax credit, or the American Opportunities credit for education, they've delayed those returns from being processed until the middle of February 15th. Mm-hmm. Do not expect a refund, we're being told, until February 27th at the earliest.
Mm-hmm. Okay. So those are holdups from Congress that IRS has to enforce.
It's to give them more time to vet these returns. These are all a big source of tax fraud. Not saying that everybody is committing tax fraud. Mm-hmm. It's just that they want to make sure that these returns have been gone over thoroughly.
Right. So it's kind of tightening up the process a little bit.
Just a little, yeah.
Okay. So if somebody, I don't know if I consider it a hazard, but it's something to watch out for that you can actually take advantage of for your taxes, first time home buyers and
first-time home buyers. Anytime you have something new with your taxes, mm-hmm. something major, like first-time home buyer, you just have a rental that you just started, you've never done stocks or anything like that, I would recommend you go see a tax professional. Mm-hmm. You don't have to necessarily come see me, but see somebody that first year. Because most people will miss write-offs that they can take and credits, the closing papers on your personal home. There's always real estate taxes and mortgage interest on that, and people miss those.
Well, every year, the taxes that you've paid on your home, you can
real estate taxes.
Real
yes.
estate taxes you can take off.
If you can itemize, yes.
Right, and that's the big thing. A lot of people with individual tax returns, they go to work, they come back, they only get one 1099, and it's like,
they get W-2, yeah.
Can they? Some can itemize and some can't.
Yeah, and with the interest rate so low, we're seeing a lot of people that even bought a home in the past couple of years. They don't have enough mortgage interest and real estate taxes to make it worthwhile itemizing. The standard deduction ends up being higher, and we always go with whatever is best for the client.
Is that where the head of household comes in, that gives you X amount of dollars versus the itemized, which you take whichever one is greater?
Well, actually, head of household is a filing status.
Okay.
And a lot of people misunderstand that.
Okay.
Their filing statuses, your basic ones, you're single, and you've got no children. Just single.
That's got to be the worst
dependents.
for paying taxes.
Yes, the IRS doesn't seem to like single people. Head of household is if you have qualifying dependents and you're not married. Married filing joint is if you're married and you choose to file jointly. You can choose to file separately, but I never recommend that. I've only seen it once or twice where it works out better for the couple. Generally, they get more credits, more of a refund, or less of a tax liability if they file jointly.
Okay, that's good to know. You also had mentioned there are certain tax documents that you get after, the 1099s, they have, until the 31st of January to send those out, but there are other ones.
Well, the W-2s they have to get out by January 31st.
Okay.
They have to be postmarked, but no later than that.
But there's other ones that come later that can mess you up if you file early and forget those, right?
If you have some retirement funds pay dividends directly to you, if you own any stock, the dividends paid on stock or from some credit unions, your interest, they don't have to have those documents out until the middle of February. And we'll see people filing their return in January, and then they get these additional documents, and they have to file an amended return. So they're paying somebody to do the return twice.
Yeah. So how long do you have to file an amended return when you catch something like that?
Well, to file an amended return, you need to file it as soon as possible if it's going to increase your income, because otherwise the IRS is going to catch that and send you a letter for money due. If you find something that's going to give you a bigger refund, you have 3 years from the filed due date or from the date that you filed the return to file an amended return to get an increased refund.
Okay. So and I know there's probably some people out there that have gotten letters and then just ignored them.
Don't do that. Eventually, if you owe them enough and it's worth their while, eventually they will attach your wages. And that generally gets people's attention to come see a tax professional. If you get a letter, a lot of times open it first and read it. Don't just leave it closed and throw it on the counter. We've had those people come in too. Open it, see what they want. A lot of times they just want a little more information on your return. It might even be something that we can fax to them, and then you're done.
Oh, that makes it nice and easy.
So you get a letter, don't panic. Come see somebody, and we'll see what they need to do. What we need to do to help you fit through the situation.
Right. Well, what about calling? A lot of people are very scared of actually calling the IRS. How helpful are they, and are they all pretty knowledgeable across the board, or do we have certain little things?
Generally, during tax season, the IRS, like all businesses, really, they hire temp workers during their busy season too. So you may not get on the general phone line, if you're asking a general question, you may not get, you're going to get somebody that's fairly new to it. They've got more knowledge than you because they have been trained. But you may have to ask for a supervisor if you've got a more complicated question.
Right. So they're just working with, let's say, in front of a computer screen with a database, plugging in your questions to
and they've
get
got
the best answer they can get.
Yes, they have the better resources than you do at hand to find the proper answer for you.
Yeah, because the tax code itself seems to be a nightmare with things written over other things and things still being there that shouldn't be there. And
the tax code's constantly changed by Congress. on a yearly basis. And I get notifications throughout the year from the IRS of changes. It's not just during tax season. Mm-hmm. There's no one person that could possibly know the entire IRS tax code. It's been written and rewritten and added to so many times, it would fill this room and then some, from ceiling to floor, wall to wall.
Whoa.
And that's in small print.
That's in small print. It's kind of like the contract small print, right?
Right.
Oh, not good, not good. So if you have, on the other side, what do you do with bankruptcies and cancellation of debts and inheritance?
Okay. Look, if you file bankrupt, you can and usually do receive 1099-C, cancellation of debt, from the companies that you filed that on.
Okay.
And this happens a lot with credit cards. They write them off. Mm-hmm. You don't even have to declare bankruptcy. You'll get a 1099-C if the credit card company writes it off, or they settle for a smaller amount than you actually owe. Mm-hmm. You can receive these 1099-Cs, and they can and usually are included as income, as if you actually received that money, and now you got to pay taxes on it.
Okay, that's not a good thing.
No. We don't like seeing those.
No, not at all. So that's the cancellation of debt. What about the inheritance?
Inheritance, generally, whatever you inherit is, as long as it doesn't increase in value from the date that the person passed away that you're inheriting from, mm-hmm. there's no tax consequence. But say it's an interest-bearing account, and it was worth $100, a nice round number, mm-hmm. on the date of death, and you don't cash it in until it's $120. That $20 is taxable because it's increased after you inherited it. That's the same on a home. If you hold on to a home that you inherit and it increases in value $30,000 before you sell it, you've got $30,000 worth of gain that you're going to pay taxes on. Okay, so the figure on it stops when the death occurs. But if you wait any longer than that, then and stocks also. Stocks, your basis in a stock, which is what you have to subtract out of what sales price, mm-hmm. is whatever the basis was on the date of death of the person that you inherited from. Mm-hmm. Mm-hmm. So even if they paid $5 for the stock, it is worth $500 now. Your basis is $500, not $5.
Okay. Now Nevada has that. We don't have a tax in Nevada.
Not state tax, no.
But
not income anyway.
It's if you inherit something, and it's $100,000 or below. There's some kind of
with the federal, and anybody that I've dealt with in the office, it's over $5 million now is the cutoff for inheritance.
Okay.
So it's really not something that I would see coming in from the average client.
Okay, we need to break really quick here. Let's take a break and thank our sponsors again, Liberty Fitness. Welcome back. This segment brought to you by Liberty Fitness. We're talking to Arnold McGuire of Patriotic Tax. Remember, if you have any tax questions for Arnold, call us here at 775-404-1115. I think everybody has tax questions, so don't be shy. You can also send a text to 775-737-2344 or use the online chat box at Biggest Little Radio. And you can remain anonymous, so don't worry about it. Okay, Arnold, welcome back.
All right.
Part 2. We left off at, I asked you about the 100,000 cutoff for inheritance. Now, is that for Nevada,
I'm unfamiliar with that. The federal law, it's I believe, and don't quote me on the exact number because it changes all the time.
Right.
I believe it's $5.35 million now.
Okay.
Anything above that, you're going to pay a high tax on.
Okay, so that's like a way high tax.
And once again, don't quote me on that. That's not a type of client that we have here in the Fernley area, generally.
Generally, right. Well, maybe someday we will.
I'm hoping.
Well, let's touch on some businesses because we've got we've got over 1,200 businesses here in Fernley.
That many already?
Yeah.
Wow.
Yeah,
that's great.
I looked at the sheet. It was 1,235, something like that.
That's great.
And we're growing again, which is absolutely marvelous. But there's a lot of smaller businesses, people just starting out. They're new to everything. So let's touch on what they need to do. I've talked to a few people that have asked me, what do I need to do? What do I need to save?
Well, the first thing I would recommend them doing, if you just started a business, is go talk to a tax professional somewhere to see exactly what sort of deductions your type of business can take. There's different deductions for any type of business, any type of profession. Basically, you want to keep all receipts. Keep receipts. I would recommend keeping like an Excel spreadsheet or a logbook, so you got running totals, because receipts fade. They're all thermal paper now. You want to keep track of mileage. Anytime you use your car for business, keep track of that mileage. That generally adds up better than actual expenses for gas, repairs, and all that. And that mileage adds up real quick. This year, for 2016, it's 54 cents every mile.
That's good to know.
We
but
know
you
it
need
doesn't.
to keep track of where you're going.
Keep track of where you're going. Keep track of the date. And let's say I use an Excel spreadsheet because it's simplest. I can type in the date, miles, and what I was doing. And I'm done. I can total the column at the end of the year.
Right. You're a lot of people don't have Excel in the car.
You can get it on your phone.
So it's, you can put it on your phone.
But you can keep a
use
little
piece of
notepad in
paper,
your car.
Notepad. One thing that I've done when I'm out, running around, or I get gas receipts or something, I'll put a start mileage on that receipt, and then I'll write whatever I need to write on that receipt.
Well,
kind of helps me remember.
Well, technically, the IRS wants you to keep track of if you're using the same vehicle for business and commuting and for your personal use. They want you to keep track of all three separately. Reality is most people don't. If you just keep an actual record of the business mileage, that's something for us anyway. It's written record, which they do require written records. You can't just say, well, I went to this store 3 times a week and it's 5 mile round trip. Well, that's not a written record. If you get audited, that's going to get thrown out. Okay.
So it should be, on the day in some kind of a logbook.
Yeah, even if it's notepad in your car. Any equipment that they buy for business, we need to know the day that they place it in service for the business, the amount. Well, I guess that's about it, really.
Right.
A brief description of it, because we may have to, if it's a high dollar item over $2,500 now, we may have to depreciate it. And that means take a portion of the expense over a number of years. Okay.
So if you have, let's say, a home office, and you buy, it may be a new program for your computer that you have to run your business with, even to a printer.
Well,
or staplers, or to anything that you've got in your office that you use.
Well, I'm glad
every day.
Glad you brought up a program. There's some professions, certain drafters, where they have to buy their software and it's $4,500. So they got to take that over a number of years. Or we can. Well, there's other ways of taking it all that year. I won't get technical on everybody because you want to understand what I'm saying, and I don't want to do that.
That's when you need to come in and see this gentleman, guys.
At least if you first start a business, go see somebody.
Right. Now,
you touched on business use of home. We can there's 2 ways of taking deductions on business use of an office at home. We can take what they call now a safe harbor method, which is $5 a square foot up to 250 square feet. Or we can take actual expenses, and we'll take a percentage of your home, everything, your utilities, mortgage interest and taxes, or if you're renting, portion of the rent. And utilities includes even garbage, because you're using all of these for the business also. Right. You've got to throw stuff away. Yes. Yeah. So how big is 250 square feet? About how big a room is that? It's not that big. It's a 10 by 15. It's okay. So if you're using like one of your 10 bedrooms, by 25, actually. A converted bedroom or something in your house for your office, that should be about right. And that's what most people use. There's buy a 3-bedroom house when you only need a 2-bedroom, so you've got a home office. Right. Yeah, that's kind of what I did. What about people that are on the road? Your long haul truckers. What kind of stuff are they dealing with? Well, the long haul truckers, if they're overnight, they're away from home for the night. I'm not talking that you leave here at 5 in the evening and drive over to Sacramento and come back here by 5 in the morning. That's still considered your not long haul.
You're talking about going from here to Oklahoma or...
Yes.
Yeah.
Those number of days that you're away from home, and there's a lot of these guys are away from home 250, 300 days a year. Mm-hmm. They're rarely home. They need to keep track of the nights that they're not at home. We can take per diem, which this year is, and don't quote me, it just changed, $59 per day, and that's instead of them keeping track of lodging, meals, etc. And being under DOT regulations, they get to take 80% of that on an employee business expense, which is attached to the Schedule A itemized deductions. Mm-hmm. So it can greatly reduce their amount of income they have to pay on.
Okay, so that goes for independent owners or franchise owners?
Well,
or what?
Actually, for in that case that I was just talking about, mm-hmm. that would be somebody that's working for a company. For the owner-operator, yes, we can take that expense also, but it's calculated completely differently. That's on a Schedule C, doesn't go to for business, mm-hmm. reporting business income. That gets a little bit more involved than we've got time for on the radio today.
Right.
In that case, definitely come see somebody, at least the first year, so that you don't miss out on some deductions that you may have.
Yeah, but plus the fact it'll kind of uncomplicate somebody of what's all involved, and they'll have like a step 1, 2, 3, and this is what to log, or this is what to watch for.
And this is what I need you to keep track of, and
mm-hmm.
all the way down the line. We've got little worksheets that we can give you to help you keep track of things, or we can make a list for you.
Okay. What about independent contractors that now you have another business and you have a salon, and these girls are basically independent contractors.
Yes.
At your place of business. So
right.
Their write-offs are going to be different than your write-offs as the owner.
The first write-off they have is the rent they pay me.
Mm-hmm.
And then all of their product, and a lot of the product they have to drive to Reno to buy. So they want to keep track of mileage from here to Reno and back, because they can take that mileage, and that, once again, mileage is a big write-off against
mm-hmm.
their total income.
Right. Well, they have other things that way back when I was in the business, and there were a lot of subtle things, because I had to buy my own towels. That was a business expense. All the soap and that I used for the towels. That's actually a business expense. But just there's a lot of little things.
I guess I treat my girls better than that. I buy the towels, not buy the laundry detergent.
Well, I can't complain the rent was low, but that type of thing that you're taking care of, you need to keep track of.
And if you think it can be a business expense, keep the receipt. If you're seeing a tax professional, bring everything. Mm-hmm. We would rather have you bring too much information than not enough.
Right.
I can always tell you that we can't take this, but if I don't have it to look at, you may miss out on a deduction. Right.
Now, your general businesses that are out there that have employees, versus the self-employed, there's a difference, because when you have a general business, you are paying taxes on your employee. There's things that you have to pay.
Right, and those are some of the quarterlies. I have a couple of clients that have employees, mm-hmm. and that's what some of the quarterlies that I file for them. They have to file with Social Security Administration, unemployment, both federal at the end of the year and state unemployment mm-hmm. quarterly. Mm-hmm. They're basically filing what wages they paid, what withholding they had, Social Security and Medicare taken out, and they have to match the Social Security and Medicare. It's something a lot of people don't know. Your employer matches everything that you pay for Social Security and Medicare. Mm-hmm. That's why when you're self-employed, you are your employer, and you pay double, because you're paying both halves.
Isn't that nice? Yes. Now, there is or was a way, people with landscaping, that may need a temp person. They go to a temp agency, and that temp agency actually is paying those taxes, and you are not. You just pay that agency a flat rate.
And that's contract worker is what we put
so
that in.
It's not an employee.
Yeah, it's not an employee. You're paying contract work, and they're paying the employee.
Right.
So, yeah, then you don't have to do all those quarterlies. You still may have to do quarterlies for if for withholding for yourself, estimated taxes for yourself if you're making enough money. Hopefully you're making enough with it you have to file quarterlies.
Yeah. Is there what is the limit on that?
Well, there's really no limit. It's if you're
Well,
going to
how much do you have to make before you worry about it?
Well, if you're going to owe more, and that's why it's different for every person's got a slightly different circumstance. If you owe more than $1,000 at the end of the year, the IRS will penalize you and charge you interest on what you should have paid quarterly.
Should have paid, and then
they will charge you interest on that.
Wonderful. Well, they're going to charge you interest on anything they can, right?
If you owe it, yes, they will.
Oh my goodness. Okay, so that's a nice thing to know with some people that have that need contract work, that need temporary, that they can not pay those taxes for employees. All they have to do is have, okay, these are the people that I need. This is how much I paid. Flat out, boom, you're done. Right.
I have one client that did have contract work. He went through Manpower, for example, because they're right here also.
That's a good thing. Is there any other tax tips that you can think of that maybe we didn't cover that could be important to people out there listening?
Well, for work credits, once again, it depends on what line of work you're in. But generally, in most professions, there's things that you have to buy that's not provided by your employer. Carpenters, any construction workers. You have tools, safety equipment, truck drivers, safety equipment, cold weather gear. Same thing for construction workers.
Right.
Little known fact, police officers. A new gun for work, ammo that they buy to practice, anything above the uniform allowance that they get. Firefighters, same thing.
Wow.
It depends on the profession, but there's generally something they can write off.
Yeah. So there's a lot of little things that everybody needs to be paying attention to that can get you the best return, without paying a lot of excess taxes. So give everybody your information again so they can call you or stop by.
Okay, I'm Arnold McGuire at Patriotic Tax. I'm on the corner of 95A and Main Street right at the stoplight. You can call me at 575-4411.
All right, thank you. Well, thanks for joining me today on Jan's Small Business Spotlight. I am Jan, owner of Fernley News Network. You can find it all in one place: breaking news, weather, plus instant weather and road conditions. Visit our website over on fernleynews.com. I'm also going to carry a podcast of this, so if anybody missed it, you can listen to it again. If you'd like to be a guest on this program or sponsor this segment, email me at radio@fernleynews.com. Call or text 775-835-3582. You can also call the station here at 775-404-1115. Thanks again to my guest, Arnold McGuire from Patriotic Tax, and our sponsor, Liberty Fitness, teaching strength through discipline. Till next week, be safe, stay informed, and keep your dial tuned to 101.3 FM.